number of hours spent exercising, number of pounds to lose, those who are overweight now have a new number to worry about, a fat tax. Healthcare costs keep growing fatter in part because Americans are too. Slapping a tax on fattening foods can help pay for healthcare reform while also combating the nation's growing obesity epidemic. A new study by the nonpartisan Urban Institute says a 10% tax on fatty food could raise more than $500 billion over the next 10 years. To encourage healthy eating, higher taxes should be imposed on soft drinks and junk food. I will be discussing today's health trends, the formation of the fat tax, and how this will affect future generations. Nearly 34% of Americans are obese. According to the U.S. Centers for Disease Control and Prevention, the growing obesity rate has led to high cholesterol and an increase in chronic diseases such as hypertension, diabetes, and cancer. The goal of the tax is to curb sales of unhealthy food and decrease overconsumption, which may help to prevent disease. Everyone loves food, especially food with saturated fats and overloaded with sugars. But is this deadly food worth the temporary delicious taste? Obesity-related issues like diabetes and high blood pressure cost more than $200 billion a year, half of which is paid by taxpayers, whether they're fat or not. By both improving dietary intake and reducing food insecurity, participation in federal nutrition programs like free and reduced lunch or food stamps play an important role in reducing obesity. As the research shows, conversely, the obesity risk rises in the absence of these programs. Federally funded programs that deal with health are beneficial to society today, but what can the government do to improve healthy habits more successfully? Adding a high tax on unhealthy food and drinks may help slow the rising rates of obesity, according to a new study published in the British Medical Journal. Previous studies suggest that the sharp tax increase on cigarettes in 2009 has contributed to the dramatic decrease in the number of smokers in the U.S., and it is hoped a fat tax would work the same way. A tax of at least 20% placed on sugar-sweetened drinks could drop obesity rates by 3.5% and prevent 2,700 heart-related deaths each year, according to the study. Researchers at Oxford University and Nottingham University claim that a 17.5% value-added tax, also known as VAT, on unhealthy food could save up to 3,200 lives a year. The tax would effectively save lives by reducing demands for unhealthy foods, consequently reducing occurrences of serious complications from obesity, such as heart attacks and diabetes. We use tax policy to influence all sorts of private decisions to produce what we consider to be socially desirable results. The progressive income tax itself is intended to bear more heavily on the rich than the poor. There are, for a few examples, tax incentives for buying a first home, for retirement saving, and for the higher education of one's children. Taxes on corporations are manipulated to obtain all sorts of economic ends thought to be good for the country. So why not with food and health policy as well? The prediction that the price of healthy foods would increase depends on the assumption that the only thing companies ever consider to achieve their goal of higher profits is raising prices. This is false because the trade-off acquired by the company when prices are raised is competitiveness. Consider this. Two companies, A and B, who have the same standards of tastiness, healthiness of product, and advertising coverage, are competing for the same market. A chooses to raise prices since he expects the tax to increase demand. B sticks with the same low price and undercuts A. Who will have the higher turnover? The fact that many food items have a limited shelf life further tips the situation to B's favor. Since absolute supply is not always an accurate indicator of price, this then becomes a question of whether healthy food supplies are adequate enough to meet demand. Dedicating the fat tax to a stated use rather than simply letting the money flow into the government's resources would make the tax's value more apparent and trackable. Experts say that the government could provide incentives for food manufacturers to use healthier ingredients. For example, some communities, in addition to dabbling in fat taxes, have banned or campaigned against the use of trans fats. The presence or even the threat of a fat tax could pressure food producers to cut down on saturated fats, calories, and unhealthy ingredients. But parents still have the ability to buy these foods and feed them to their children. 1 out of 5 children drink 3 or more sugar-sweetened beverages per day, accounting for an extra meal according to the HBO documentary series Weight of the Nation. The childhood obesity crisis has prompted repeated calls for government action to curb the marketing of unhealthy food to children. Food and entertainment industry groups have asserted that the First Amendment prohibits such regulation. However, case law establishes that the First Amendment does not protect inherently misleading commercial speech. Cognitive research indicates that young children cannot effectively recognize the persuasive intent of advertising or apply the critical evaluation required to comprehend commercial messages. Given this combination that government can inhibit inherently misleading advertising and that children cannot adequately understand commercial messages, advertising to children younger than age 12 should be considered beyond the scope of constitutional protection. Even though taxing junk foods may not stop many people from buying those foods, that extra tax can directly help pay for healthcare costs that relate to obesity, such as heart disease and diabetes that our government is in debt for.
Yeah,